market has started in earnest. It actually commenced since the 2nd of this month. However, not all stockbrokers are around and have started trading. But then we've seen a consistent decline in the market. Here to speak to me on the views of the market since the year began is Mr. Tsaku. Thank you for joining me.
Great pleasure, as always.
So what are your views regarding the market since the year commenced?
Well, we all entered the year with great hope and expectation of some moderation. If you do recall, just to put things in perspective, the entire 2018, which preceded this year, of course, posted a negative, overall impact in excess of 18%. So we were hopeful that, the general effect, which we're usually accustomed to having some moderation in terms of the direction of the market, we didn't quite see that play out so far. Contrary to what we experienced in 2018, where the market gave some kind of positive momentum, we're yet to see an indication of anything positive. So far, the market has declined in excess of, close to 3% as a date. If you take also what is happening at the moment, as we speak, the market has already lost in excess of 1%. So if we do close in this negative territory, then it does appear that we will have another day added up to the negative. So, so far, sentiments appear to be bearish. People are very cautious, but business is going on.
All right, so what sectors would you say have really felt the effects of this decline since the market began?
I think the most significant has been the banking stocks. Incidentally, quite a number of them have suffered decline in values. GT, Zenith, Access, UBA, First Bank, name them. And interestingly, particularly those of them that are listed on the premium board, those ones have suffered quite a significant backlash, and I do think that usually that's the sector that quite a number of investors get attracted to.
Let's talk about the Diamond Bank and Access Bank merger. How are investors taking this merging?
I think on a principle basis, it's been a welcome development. I do think that it's one of the first experiences we witnessed in a very long time, especially in that industry, post-consolidation. I think they're all looking forward to it. Don't forget that there are still T's to be crossed and I's to be dotted. So I think it's positive so far, even though on the other side of Access, we've continued to see diminution in its own value, which again gives investors some level of conflicting signals.
Let's also move towards the oil and gas sector. We know that Nigeria is a highly commodity-dependent economy, and then with the declining oil prices, how is this affecting or playing out in the market?
Well, as is often said, the capital market is a barometer of the economy, right? It gives you clear signals and indication as to what's happening or what's likely to happen. This year's budget, even though not yet passed, is hinged on an approximate price of a barrel at $60. As we speak, that target is already a threat because oil is already selling below. And if you listen to forecasts, by typical names in the industry, the average is likely to be below the benchmark that we have set. So what does that mean? It simply means that the kind of financing that is expected to happen is not likely to happen, of course, unless you're going to resort to some other sources of funding.
Thank you very much. And there you have it, the activities of the Nigerian Stock Exchange since the year began for 2019, since 2nd of January. We've seen a very bearish market. However, analysts are still saying that this may persist with current economic trends and political instability and uncertainty. Live from the Nigerian Stock Exchange, I am Irene Ubani.